Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. Last two videos I have completed the basic explanation of financial system. What is financial system? What is the Indian financial system? What are financial markets? What are the different types of financial markets? Functions of financial markets? Structure of Indian financial system. These are the topics already I have covered in the last two videos. In this video, I am going to explain you about the importance of financial services and importance of financial instruments in the Indian financial system. And lastly, what is the role of financial system in the economic development of the country? So these three topics I am going to explain in this video. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel. Select the subject financial institutions and markets. Watch the first two videos, be acquainted, be clear regarding the meaning of financial system. Then only you can be able to understand this. So before starting the explanation of these topics, take the screenshot of the points which I have written on the board. Then I'll explain all the points in detail. First of all, importance of financial services. Actually, the meaning of financial services are, it's a system through which the savings will be channelized into investments. Mobilization of savings of the people and channelizing for investment, for economic development. So all the activities which are concerned with mobilization of savings and directing towards investment, that is called financial services. So financial services in a broader sense means mobilization and allocation of funds or savings. The people will earn the money, and after spending for the requirement, some savings will be there. If the savings are not properly utilized, then there won't be any investment. There won't be any capital formation. When no investment, no capital formation, no economic development. So economic development will take place whenever the savings are converted into investments. So these financial services are concerned with converting or transforming the savings into investment. So it transforms the savings into investment. Financial services also act as financial intermediaries. So in this financial system, there are many intermediaries or the activities which help in converting the savings into investment. So all these intermediaries will play a very important role in the whole financial system. So these intermediaries, by providing services such as leasing, merchant banking, credit rating or factoring, all these are the services which are provided by intermediaries. The financial services helps in the growth and expansion of business and firms. See, every business organization or any organization requires funds. So there should be some system through which the funds should be mobilized and directed towards the business or organizations so that the business can run smoothly. Without capital, without funds, no business can function. So through this financial system, the savings will be diverted towards investment in the business, in the firms, and expansion of business and firms, and also lead to economic growth of the country. The economic development of the country depends on these business houses, and this financial system will help the business houses by getting the capital. In the financial services, the RBI regulates the functioning. See here, this financial system is not automatic, but it should be regulated. In every country, the financial system will be regulated by the government. So in India, the complete financial system is regulated by many bodies. The most important body for regulating the financial system is the RBI. Apart from RBI, a number of other bodies are there like SEBI or IRDA, etc. So many other bodies are there which regulates the financial system. So to protect the interest of investors, it regulates the money market. Why these organizations will regulate this financial system? Because public money is involved. The people from their savings have invested the money. When they have invested the money, there should be some guarantee. There should be some security. So government will protect the interest of the investors by regulating the financial system. Example, the RBI, SEBI will regulate the financial system so that the people will have the faith, will have the trust in the system and come forward to invest their savings. Now, following points highlight the importance of financial services in Indian financial system. Now, few points I am going to explain you which highlight what is the importance of financial system in India. First one is it helps to raise funds from the investors, individuals and institutions through a wide range of instruments. This financial system will help the investors. Like individual investors are there, institutional investors are there, so many investors are there. So this financial system will provide a number of instruments. By purchasing these instruments, the people can be able to invest the money. For example, I am the individual investor. I am having some savings. I want to invest. There is not a single avenue of investment. So many different areas are there where I can be able to make the investment. So many instruments are there, like I can invest in shares, I can invest in debentures, I can invest in bonds, I can make a portfolio. So this financial system will provide services to investors in the form of individuals or institutions so that they can be able to make the investment in their own choice of instruments. Secondly, they help in effective and optimum deployment of funds. See here, a country's economic development depends on the utilization of funds. And remember, funds are scarce. We don't have abundant or unlimited funds. We have limited funds. A country will become economically development when it effectively utilizes the scarce resource of funds. So this financial system will help the country in effectively utilizing the funds which are scarce, and they help to mobilize the savings efficiently by providing specialized services like credit research, credit rating, leasing, etc. This financial system will explain the investors regarding how to make the investment. What are the different issues in making the investment? How to make investment effective, efficient by making research, by making credit research, credit rating, leasing. So many services are provided by this financial system so that people will become educated regarding the investment. Next one is they help to develop Indian economy through channelizing the savings into profitable investments. See, the government is a planned economy. In this planned economy, the government has made the priorities that we have to develop this sector, we have to give more importance to this sector, like that. So the government will encourage the people to save the money in different forms, so that all the money which is saved in different forms can be channelized by the country, by the government in a proper way, so that there should be economic development of the country. They help in reducing the risk involved in investment. See here, risk is involved in every situation of life. So even investment also there is risk, because a person is investing the money now expecting that his money will grow in future. But is it sure that definitely our money will grow? Is there any certainty that a person will get the return on his investment? There is no certainty. Always there is future is uncertain. So how an investor can say that I'm investing so much of money, I will get the return, 100% I will get the return? No, we cannot say. Always risk is attached. This financial system will evaluate how you can be able to manage the risk. Remember, risk cannot be eliminated. Risk can be minimized. So if I'm a good investor, I will try to manage the risk. I will not avoid the risk, because risk is life. In life, there is so many types of risks are there. We cannot avoid the risk. We must be able to manage the risk. So financial system will teach the people, will teach the investors how to manage the risk, how to recognize the risk. Don't avoid the risk, take the risk, but manage it properly. So these points will highlight the importance of financial system in any country. The second topic is importance of financial instruments, particularly in Indian financial system. What are the different financial instruments? First point, financial instruments are the negotiable instruments which are bought and sold by the people, right? Just like any commodity. Any commodity we are buying and selling, similarly financial instruments are also negotiable instruments, transferable instruments from one person to another person. People will buy and sell. Simple example of financial instruments are the shares, debentures, bonds, etc. These are called financial instruments which the people will buy for a price. These financial instruments carry income in the form of interest or dividend to be paid in a future period of time. So when a person purchases the financial instrument, the instrument will carry an income in the form of interest or dividend. For example, if a person purchases shares, he will get dividend in future. If a person has purchased a bond or debenture, he will get the interest. So these financial instruments will carry income in the form of interest and dividend, which is obtained, which is received by the investor in future. Now, financial instrument consists of primary and secondary securities. Now we can divide the instruments into two categories, primary securities and secondary securities. In the last video also I have explained you about primary market and secondary market. Now here I am going to explain you primary securities are those securities which are first time issued by a company to the purchaser. First time the securities are coming out from the seller to the buyer. That is called primary securities. And secondary securities are those securities which are existing. Presently it is changing the hands from one person to another person. These are called secondary securities. And the secondary securities are dealt in the stock exchanges. Now, in primary market, the securities are issued directly by the borrower to the final purchaser. The secondary security deal with purchase and sale of existing security. Just now I told. The financial instrument play an important role in directing funds from the lender to the buyer. Remember, the financial instruments play a very important role in every country in the financial system. By using these financial instruments, the people can buy and sell the assets. The assets are financial instruments. Now, the financial instruments differ in liquidity, return, risk and marketability. Remember, all the financial instruments are not same. Every financial instruments will have different type of risk, different type of liquidity, different type of marketability. The features of different financial instruments are different. Example, the shares and bonds. These two are securities. These two are instruments, but the nature is different. The shares are the real owners of the company. When a person purchases the shares, he will get the dividend. But the dividend depends on the profitability of the company, regarding the discretion whether the dividend is declared by the company or not. Whereas in case of bonds and debentures, the rate of interest is fixed. Whether the company has earned profit or incurred loss, the company has to pay fixed rate of interest to bondholders. So what I want to say, the characteristic features of every instrument is different. Now a person investor has to evaluate whether from my point of view which instrument is better by considering my objectives. Now the following points highlight the importance of financial instruments in Indian financial market. How financial instruments are important? First one, it gives rise to financial assets of an entity, and on the other hand financial liability to another entity. These financial instruments are assets to one person and a liability to another person. Example, I have purchased the financial instruments. I have paid the amount and purchased the financial instruments. So these are the assets in my hand. Whereas the same, security in the hands of the issuing authority, it's a liability. Because they have received the money with a promise that this money will be paid later on. That means these financial instruments are asset in the hands of one entity and a liability on the hands of the other entity. Shares, I have purchased the shares. So it's an asset to me. Whereas the same shares issued by the company. So from company point of view, it's a liability. Now secondly, they act as evidence of ownership of some securities like shares and debentures. If a person is holding the financial instruments, it is an evidence that he is the owner, he has purchased, he has given the money, and he is the owner of that asset. The financial instruments are the assets. Thirdly, they can be in the form of securities or bonds which give value to trade. That means just like purchasing any other property, a person can also purchase the property in the form of shares and debentures. That's also a tradable security. That means at any time a person can purchase, a person can sell the instruments. So it is a stock in trade. They can be in the form of assets or package of assets which company can easily trade. Not necessarily that a person can purchase only one security, a person can make a portfolio of securities. Just like nowadays investment companies are there. The investment company will purchase the instrument in a portfolio form, in a package form. The next one is they help to maintain the contractual right to receive, deal and currency, then bonds or loan, shares, options, futures, etc. Actually, when a person purchases or sells the security, they enter into a contractual relationship. Just like purchasing any other asset, in the same way, the financial instruments can be bought and sold. They can enter into a contractual relationship. There is a contract between the buyer and seller of financial instruments. So these financial instruments are also asset, just like gold, just like property. Similarly, securities are also asset. These points will highlight the importance of financial instruments in the financial system. Now, the role of financial system in the economic development of a country. Remember, financial system play a very, very important role in the economic development of a country. Very important role. So how? The financial system has made a significant contribution towards economic development of a country. The following points will highlight. The few points I am highlighting, this point will explain how the financial system will be very much helpful in the economic development of a country. First one, mobilize savings. If there is no financial system, the savings cannot be mobilized. Then individual, whoever earns the money and saves some money, they cannot be properly utilized. The savings cannot be properly utilized. So no investment, no benefit to the saver. Suppose I have saved some money, I have not invested, then the savings will not grow. The savings have to be mobilized. So this financial system will help in mobilizing the saving. Then promoting investment in financial assets. The financial system will teach the investor how to make the investment. How to make the investment from their saving. So financial system is quite dynamic in nature. It promotes the saving into financial asset. This will help in the economic growth of a country. So this financial system will help the people in purchasing the financial instruments from their saving. This leads to economic growth of the country. Thirdly, encourage investments. The people are not aware about investments, how to utilize the funds, just like time. Once the time is gone, we cannot do anything. Similarly, the savings should be properly utilized, then only it will give a benefit to us. So this financial system will teach the people, will teach the importance of investment in our life. So it will promote the people to make the investments. Investment is very important in the economic growth of the country. In this regard, the financial system gathers the saving of the people and channel them into investment, which turns results in economic development. See, the economic development of any country depends on the capital formation, the growth of capital. The capital will grow only when we can properly utilize our savings, channelize the savings into investment. That only will give rise to the economic development. Next one is allocation of savings based on national priorities. Every country has to make some national priorities, that we have to develop this sector, we have to give more importance to this sector. Like that, planning will be made by the government. Now, after making the planning, the government has to deploy the funds in that sector. Example, in India, the government says that we should give more importance to rural areas, we should give more importance to agriculture, infrastructure development. So government will make some priority for these sectors. Now the government will channelize the funds into this sector for national priority, national importance. So planning will become successful if we have a good financial system. When planning is there, good financial system is there, definitely the country will economically grow. There is economic development in the country. Next, provides a spectrum of financial assets. Nowadays, a lot of innovations are taking place in the financial system, where different types of securities are bought and sold, particularly derivatives. Derivatives market. This is becoming a more dynamic market where new instruments are available for investment. So earlier, in olden days, last 40-50 years back, only few instruments are there. Only few financial instruments are there. But nowadays, due to economic development, due to innovations in the market, so many financial instruments are available. So a person, an investor, will have so many options to make the investment according to his requirement. Because every investor has their own objectives of investment. So according to my objectives, I will select that type of instrument. So we have a spectrum of investments. So many investments avenues are available. Next, developing backward areas. All the area will not be equally developed. Some backward area will be there. So government will make some priority regarding the development of backward area. So this financial system will help the government in developing the backward area by channelizing the funds in that area. Next one is offering financial services. Nowadays there are many intermediaries which are coming in the financial system, which help in converting the savings into investment. Many financial services are provided, just like leasing, credit rating or factoring. All these are the services which are provided by intermediaries. The intermediaries are the backbone. They are the agents of this financial system. Last one, encouraging entrepreneurial talents. Actually, we have a lot of entrepreneurial talents in our country. So until and unless some funds are given to those entrepreneurs, they cannot be able to convert their ideas into reality. So this financial system will help the entrepreneurial talent to convert their ideas into reality and make the big investment projects. So in this way, you can see that the role of financial system is very high in developing the country. in developing the country. So in this video, I have explained you the importance of financial services, the importance of financial instruments, and lastly, what is the role of financial system in the economic development of the country. Very frequently in examination, this question will be asked. So watch the video 2, 3, 4 times. Then only you can be able to get all the points in your mind, and excellently you can write in examination with more confidence. I wish you all the best for your preparations for your exams. Inshallah, we'll continue the next topic in this subject of financial institutions and markets in the next video.